Hey, what's up, divine beings? Welcome to the 9th episode of Conscious Conversations. Honored to have Samlee today on the show. He has been a realtor and property consultant since 2016 for JML Property, a company in Macau. And in 2018, he co-founded Epic Property Investor Club, which specialized in helping investors get into UK real estate market. Overall, he's a student of personal growth, someone that I look up to and can always learn from. Today, we'll be breaking myths and going over the basics of real estate investing so that you can start thinking and acting on this beautiful asset class. So thank you so much, Sam, for being on the show.
Thank you, Marco. Glad to be here.
Can you just tell me a little bit about the backstory of how you got into real estate?
Yeah. So basically, I was always interested in it. As my dad was, an engineer for most of his career.
Mm-hmm.
So, I saw him at construction sites and, doing developments all around the world. That's how I ended up growing up in Macau, actually, is because my dad was part of the team building the convention center at the Macau Tower Center.
Mm-hmm. Okay.
And so I always had an interest in it. And after graduating from university in Hong Kong, I was working there for about 9 months. And I took a quick break from work to really kind of develop myself and think about what I want to do. And real estate really came to me as something that I wanted to be involved with. So I think 2016, I came back to Macau. I wanted to come into a small company, which was JML Property, and get involved in many sides of the business. So JML Property is basically a property management and agency in Macau, serving mostly expat clients.
Mm-hmm.
So I came in here, and the first thing that I did was property management. So as I was coming into this company, the person that was helping JML manage 100 or so properties was leaving. So I took over that role for a while.
Oh, nice. Okay.
And, that gave me a really good understanding of how real estate is run on a day-to-day kind of level. Helping tenants fix issues, dealing with landlords, setting expectations, dealing with contractors to get stuff done, a little bit of project management. Some landlords would ask for, a renovation kind of work to be done, and I would, work with Juliet, the director at JML, to do some of that kind of work as well. So from then I got my real estate license, and then I started renting and selling real estate in Macau. And then a couple of years after of doing that, I started, I set up a company called Epic Property Investors Club with the director of JML, Keith, who is also my mentor. Now I consider one of my closest friends actually, and we set that company up together, and through our contacts at JML Property, we were able to get investor financing, and we put some of our own money into it as well and started investing in property in the UK. So that company is about 2.5 years old now,
Mm-hmm.
a little over 2.5 years old. So that's my baby, and that's kind of been my journey so far. Yeah.
Mm. Yeah. So you started off working inside the industry, not investing in real estate per se, but kind of just being around people who did, and managing and renting it out. So I'm just wondering, what did you learn being an insider about the real estate industry that surprised you the most, that helped you to become a good investor in real estate? Because on this show, we're kind of helping people become an investor rather than working
Right.
on the real estate. Yeah.
That's a good question. I think, the biggest thing that I got from being an agent and working in the industry that helped me as an investor is that in Macau, I don't know if everyone listening to this would know, but property prices are really, really expensive. An average property can easily go for more than $1 million US.
Mm-hmm.
So helping transact, high value properties and seeing properties be sold and bought all the time kind of gave me a sense that it's a normal thing to do, because for a lot of people, it's really daunting, right? You think about buying a property, it's this huge deal. But for me, after helping people do it and seeing a lot of people buy and sell stuff all the time,
Mm-hmm.
it just became kind of a normal thing to do. So when I first bought my first property, it wasn't as big of a step because it was something that I was used to, at least seeing other people do. So I think that side of things really helped me out.
Okay, so it's the mindset's okay, this I've been around these people that make these big deals, so it's it's not.
Yeah, I mean, I wouldn't say it was big deals. I mean, for Macau standards,
Average.
Yeah, average
Right.
sales, but it's still over
Right.
$1 million easily.
Right.
Some properties we do have some big transactions, penthouses and whatnot.
Right.
Up to 20 million Hong Kong dollars.
Right.
So there are some big transactions, but yeah, just seeing that happen all the time, that gave me that mindset. Like you said, I didn't put it on a pedestal because I think the problem with young people mostly is that they think buying a property is this huge deal, but actually, if you really break it down, it doesn't have to be.
Okay, so let's talk about that then. So how old were you when you first bought your property, and like how did you make it happen?
My first property, I was 26. I'm 28 now, and so, like I said, I bought that property not in my own name, but through a company that formed in the UK. It's registered in the UK, called Epic, as I mentioned, and the way that I was able to buy that property is through raising money, basically through Keith and other people. I put in some of my own money, but not the majority of the money came from other investors. So that's one mistake that a lot of young people make too, I think, is that they think that they have to do everything with their own money and spend years and years building their own kind of nest egg of cash so that until they can buy their own first property. But actually there's many different ways you can approach it.
Okay, so can you break it down a little bit further? Like, for example, if I want to do something that like what you did, like how can I kind of like create that? How can I pull money together and kind of buy a property? But first of all, that property is overseas, right?
It's overseas. It's in the UK.
Okay.
Yeah.
All right.
Well, the first thing I would say is I would recommend that you do what I did and find a mentor. The only reason I was able to do that was because I had a mentor, Keith. He's my business partner and mentor. So he already knew that investing in real estate worked because he's built a portfolio of his own. Yeah. And he was just more open to kind of teaching me and walking me through the process of the whole thing. So I think there's many ways to find a mentor. For me, it was through working at JML and just kind of being in the industry. But these days there's online mentors, there's many other kinds of mentors you can find. But if you can be in the industry like I was, that's kind of the best way. But I guess it's not always accessible to everybody. Yeah.
Okay. So what did Keith kind of teach you that allowed you or empowered you to make this deal? First of all, when you talk about like investing in property with a bunch of people, so does that mean there's multiple ownerships and the rent is split between several people?
It can be, but in our case it wasn't. So the way that we approach this investment, it's called a BRRRR. In the industry, it's called a BRRRR strategy, BRRR.
Yeah, I heard about
so
that.
You buy, you refurb, you rent it out, and you refinance, and then you repeat.
Okay.
Yeah. So what you do with this strategy is you find a property that is under the market value, right? That needs some kind of renovation or value added to it. So you can't really do this with a brand new property, or you can't do it with something that has it's like priced at market rate and doesn't need any work to be done. So you find an old property, generally needs a bit of work. You buy it from a motivated seller under the market value, and then you refurb it, add value to it, and then when you refinance on the back end, you repay back the investors that got in on the deal with you, and then you just keep doing that.
Okay, so the investors is essentially just kind of lending you money to do this BRRRR deal?
Yeah, so that's one strategy. Investors can either lend money or they can JV, what we call a joint venture partnership, where they take an equity share in the company, right, or in the property. Right. But in the case of my first property, it was kind of a lender kind of situation. So Keith lent money into it. I put money up. Some investors put money up, and then we bought an old property. It was kind of a lower value property in the north of England. And we refurbed it, refinanced it, and then, once you pay the investors out, you pay. So the investors lend money, and they obviously get an interest rate for it.
Right.
So once you refinance the property at an increased value, you repay the investor. They go home with the principal and the interest.
Right.
And then you hold on to the property yourself.
Okay.
Yeah.
So how many BRRRR kind of strategies? I guess how many properties were you able to acquire through the strategy right now alone?
Up to now, 7.
So you own 7 property right now.
Well, yeah.
Okay.
Under the company. Yeah.
Oh dang. Okay.
Yeah.
And I heard about that BRRRR strategy from the Bigger podcast. The book Tech talks about like buying at 80% the market rate,
Yeah.
and then look for houses that like are like big red flags for the average investors, but like bad smell or like stains or things like that. So people are like scared of those, and you kind of just like do it up and then refinance to the bank, and so now you're owing the bank money, and then the rent is paying the mortgage.
Exactly.
Right?
Yeah.
Okay.
Yeah.
And then how long does it usually take for you to have 100% equity on the property then?
Well, it depends. I mean, sometimes you don't even want to have 100% equity in the property, right? But if you're talking about kind of the period that it takes to pay off the loan, anywhere from 30 to 35 years, generally speaking. But we can kind of go into it. But our strategy is we don't want to hold too much debt on properties.
Okay.
So in the UK, you can have kind of interest-only payments, mortgages, or principal pay-down mortgages. So we tend to go towards the principal pay-down, even though our cash flow is a little bit less per month, because we build up equity faster.
Right.
And over the long term, I think real estate is an equity build-up game. It's not really a cash flow game in the long run.
Okay.
Yeah.
So you think in the long run you make money through appreciation rather than cash flow?
You obviously need both. And there's a popular saying in real estate, especially like in the, kind of the real estate investing community online.
Yeah.
They say like cash flow is king.
Uh-huh.
And to a degree that's true. You need cash flow. But at the end of the day, equity is what you're aiming for. So if you have to optimize your long-term decisions, I would always say optimize for like higher equity, not just cash flow. Because cash flow, there's many ways to generate cash flow in real estate, but at the end of the day, you want to have ownership of the properties that you operate and control. You don't just want the cash flow from it. So what I mean is, like, for example, there's a strategy in real estate called rent to rent, right? So what you do is you find an owner that doesn't want to deal with the property or doesn't want to deal with a tenant, whatever. So you rent the property from this person, and then you refurb it, you improve it in some kind of way. Maybe you add some rooms to it. You put it in a situation where you can get more rent for it than you're paying to the actual owner.
Yeah.
Right? And then you rent it out, and then you keep the difference.
Yeah.
Right? So you're paying the owner, say like $800, and then you're renting it out for $1,200,
Right.
and you're keeping $400.
Right.
And you can have lots of those properties, and then you could be generating tons and tons of cash flow. But it doesn't mean you own anything, right?
Right.
So, and then a lot of these people, there was a lot of people in the UK doing this, service accommodation, rent to rent. When COVID hit, and no one was because a lot of these rent to rent situations, they're renting out to Airbnb kind of short-term lets, right? So when COVID hit and no one was doing short-term lets anymore, their entire cash flow business just went away. So they were optimizing for cash flow, and it kind of backfired on them, right? But then say like you own 5 properties and you have full equity in all of them, they're all paid off. COVID hits, this happens, that happens. No matter what happens, you still own 5 properties, and you can kind of ride out whatever fluctuations there are in the market. And at the end of the day, you hold 5 properties. And this might change, but generally speaking, we say over the long term, property always appreciates.
Okay, got you.
Yeah.
And I just want to touch a little bit on the refinance part. Like, when you go, like, let's say when you pay back, I guess when you kind of go to the bank and say, hey, I want to refinance this, what kind of criteria do they look at you? Like, do you need to have, do they look at the property on the cash flow it's yielding, or they look at your income ability as a person? So
because we were refinancing under the company, so it wasn't a person refinancing, it was a company holding the property and the company's refinancing. Okay. So they look at generally the company,
Okay.
The company's track record, and they obviously look at the property as well.
Right.
So some of the things they look at is things like they look at the build of the property. So there are some types of, so in the 70s, for example, in the 1970s in the UK, they were trying to build more houses faster, so they used a type of concrete to build these properties. And the banks generally don't like these kind of properties because they like more kind of standard brick construction properties. Even though they're really, really old, they've stood the test of time. They know that they're not going to have major issues with the structure of the property. So the banks tend to like these kind of properties as well, more because they're more kind of standard construction. They obviously look at they want to refinance when the property is tenanted, even if it's a residential property. They like to see a healthy tenant in there. They like to see kind of different aspects like that. And of course, the condition of the property, its potential, all of that, they'll consider it. They'll do a survey on the property before they refinance.
And so that leads me to questions like, is there a benefit, like what's the pros and cons with investing in property under your own individual name versus like a company structure?
Well, in the UK at least, the biggest difference between doing one or the other is tax.
Okay.
So an individual gets taxed in one way. It depends on the person, so I don't want to really comment on how, but it depends on their tax bracket and everything like that. But a company will be taxed, as a company.
Okay.
Which is, generally speaking, if you're building a portfolio over the long term, I would say that it's more favorable tax-wise to hold your properties under a company. But if you're kind of just a retail investor, you just want to have one or two properties, it might not be worth your time or effort to set up a company and go through that whole process.
Okay, so can you maybe just go like a tiny bit deeper in terms of like what are the tax benefits if we do it under a corporate, if I want to be a little bit more sophisticated? And I know like with Robert Kiyosaki, he says that like the rich own nothing in their name, they own it through a company, and if someone go after you, they won't be able to touch kind of like the property as well, right? So there's that limit liability protection as well. But in terms of tax benefits, can you comment on that a little bit more?
Well, so in the UK, well, you're absolutely right. Like they call it a limited liability company, right? LLC. So there's that side of it. But another side of it is like in the UK, the interest rate, the interest payments that you make on your mortgage, individuals, they used to be able to write it off. They can't anymore. So with a company, it still applies. So just basic things like that.
Okay. Write it off. What do you mean by that?
So just in terms of like the writing it off as an expense when you file your taxes.
Oh, right. Like it can be like tax deductible.
Yeah.
Oh, okay. Yeah. Little loopholes like that.
Yeah.
Okay. Gotcha. So we went into a little rabbit hole, a little stream of thought there, which is nice, and trying to be more flowy in this type of conversation sometimes instead of like being like, okay, what's the next question? But I want to kind of jump back into the more macro, like kind of what we set out today. So just like when we talk about real estate investment, right? Can you just like what in your definition, like what is real estate investment?
So I kind of talked about this earlier, but in the macro picture, obviously there's different ways of investing real estate. There's different asset classes. But in the long game, it's all about ownership. It's about increasing your ownership of property. And if you look at it from another way, it's also, it's like any business. It's a business, right? And a business is only viable if people get value from it. So, you can look at it as, so the way that I view real estate in my portfolio is kind of like a small hotel business.
Okay.
So it's like you go to, a hotel somewhere at a vacation destination, and there's a property right there. You can rent it per night, and you appreciate that, right? You appreciate the fact that someone's built it, someone's keeping it clean and nice for you, and you're able to benefit from it by paying whatever amount of money that you agreed to pay for it. So that's just for one night. But then with a rental property, I just kind of see it as an extension of that. It's not as dramatic as going to a beachside destination and renting a room for a night, but it's just, if you think about it, that's what it is. It's just longer term rent, right? It's just an extension of that. So you have a responsibility as a landlord to provide a nice home, keep it clean, keep it safe, for your tenants, and in return, and for using that and having that benefit, your tenants pay you rent, and then as a landlord, you kind of get the cash flow from that. But yeah, so there's two sides. One side is you want to increase the equity you have in your portfolio, and on the other hand, you want to provide as much service and value to people through your property and your portfolio as possible.
Mm-hmm. And I guess you can do it through like the residential, the commercial, and what do you call the industrial?
Yeah.
Like different types of property, right? And for you right now, what would you say would be the best place to start in terms of like for people, like residential, commercial, industrial?
I'd say residential. Yeah, that's where I started, and the reason I said it is because it's familiar. People, you know yourself. Everyone's probably rented property, or we all live in property.
Mm-hmm.
So you kind of already understand the dynamic of residential property investment. Commercial, for someone who hasn't done any commercial deals or anything before, it can be a bit more technical, a bit more confusing. But residential is, generally speaking, more approachable.
Mm-hmm.
But if you're kind of a sophisticated investor, of course there is the option of jumping into commercial. But broadly speaking, I would say just start off with a simple residential investment. Yeah.
Okay. What's kind of like the pros and cons with residential versus commercial in your perspective?
So the pros and cons. Well, I think the pros of, let's start with the pros of commercial real estate is, generally speaking, the landlords and the sellers that you're dealing with, they're business people. They own commercial property, so they're less emotional about their property. So in terms of striking deals with these people, you can say that it's easier because you're speaking the same language of business.
Right.
But sometimes if you're approaching a residential sale, you're trying to strike a deal with a residential landlord, they might see it as their home. They might, think, oh, I used to live here, it's such a beautiful home. They have an emotional attachment to it.
Right.
So sometimes you're not able to connect on them on that business level, because at the end of the day, it has to make financial sense for you, because it's an investment, right? It's not a home.
Mm-hmm.
So there is that kind of difference. And in terms of management, I would say commercial has a lot of benefits. In the UK, they call it FRI, fully repairs and insuring.
Mm-hmm.
So the tenant basically just takes care of everything. Something breaks in the property, they take care of it, they refurb it. But with residential property, you still have to, if there's an issue in the property, there's something breaks down, you still have to go in and take care of it. You can hire someone to do it, but at the end of the day, someone has to take care of it, and it still comes back to you.
Yeah.
So in terms of managing the properties, there's that kind of difference. Yeah.
Gotcha. And let me just kind of like start with the why, right? Actually, we didn't start with the why. It's kind of like we're several minutes in, but like if we think about property and real estate investment as an asset class, like in your opinion, like why should we consider this asset class compared to other asset class, for example, like stocks or other things?
Right. Well, if you consider real estate as a simple investment class, right? First of all, it has inherent value. It's not just it has an actual function and a way of providing service to people. It's not just something that holds value, but it's also something that puts out value. So in that sense, unless the property is in the middle of nowhere and there's no people around it, the property only has value insofar as it has value to people, right? So a lot of people do, and you can speculate in property, but at the end of the day, there's inherent value in real estate. So I think that's one difference. And another difference is that it generates cash flow, which is really, really important, because if you have say investments in commodities or certain stocks, even, it might not pay a dividend, it doesn't produce any cash flow. But real estate, the whole point is that it produces cash flow for you on a month-to-month basis. So those two things, I think, is the core difference between real estate and some of the other asset classes.
Okay, so in your opinion, do you have well, first of all, if you don't mind me saying, like, majority of your portfolio
Yeah.
is in real estate.
Yeah.
Correct. But So, like, did you kind of consciously build it that way where it's 100% real estate, or would you say like, hey, if I have to build it, I would say like, hey, because I'm considering real estate right now.
Sure.
And my overall portfolio as of right now is around, well, I'm thinking like 25% cash, 25% gold, 25% stocks, and then perhaps like the rest of 20%, like 10% is Bitcoin, and then the rest I'm thinking about allocating to like real estate investments, kind of like replacing the bond in the like most of portfolios, right? So I'm not sure if you have an opinion on this, but what do you think like someone's like the allocation towards real estate should be in one's portfolio?
Well, it's a bit of a different scenario, I think, between you and me, because for me it's my business, you know, and it's my profession as well. So when most people think about investing in real estate, they just talk about kind of buying real estate. So for us, like I mentioned, our strategy is the BRRRR strategy,
right?
Generally speaking, and that's not really an investment strategy. That's more of a development strategy. So you're taking something and you're adding value to it yourself. You're developing the property. So you're making a product to put on the market. Whereas in the general sense, when people say investing in property, they just think about buying something and maybe renting it out. You know, so I think there is that difference. So for me, I don't only treat it as my investment portfolio, but it's also my business.
Okay.
You know, so there is that difference. But in terms of allocation, I think, you know, at the end of the day, like, it's all up to the person. But for me, I think real estate is a really valuable investment class, and I would recommend everyone have at least some aspect of real estate in their, you know, broader portfolio. For me, at this point in my life, I'm all in on real estate, like you mentioned, and it's the only thing that I hold. I put all my money into my business and into real estate. But, you know, later on, as this portfolio grows, as it produces more and more cash flow, I might take some of that money and put it in something else as well, diversify a little bit. But I think, you know, since I'm in the game of real estate, obviously my holdings is going to be majority real estate.
Right.
But it doesn't have to be that way for everyone. But I think if you can incorporate some type of element of real estate, you don't have to hold real estate yourself. You can buy REITs, or you can, you know, partner with somebody to do a small development or something like that. But I think it merits some consideration, at least for most people.
Got you. And just for the people that don't understand, REIT is like sort of like a holding, where it's like you buy this REIT and then it's like a stock, but one company holds a lot of real estate kind of holdings, real estate properties, right?
Yeah. So REITs, you know, they say that it's like straddles the best of both worlds in a sense that it's liquid, right? It's like a share. You can buy and sell REITs at will, and it pays an income dividend. So in that sense, it's great. But on the other hand, you eliminate the biggest benefit of actually owning real estate, which is the control. You don't really control the assets. The company who operates the REIT just controls all the assets. So in that sense, you know, it's not technically real estate investing, although you have exposure to real estate. Yeah.
Because you can't leverage debt when you own a REIT.
Yeah.
Okay.
Yeah. And also you don't have physical control of the asset. Like, you can't, you know, most of the returns that you generate from real estate, from at least from our perspective, is from developing the property, not just holding it.
Right.
So you can't really do that with the REIT, right?
Correct, because when you buy it under value of the market, that's 80% already. I mean, you're making 20% just by buying at a lower under market value.
Yeah, there's that built-in equity.
Yeah. Okay, but would you advise people to like buy REIT just to get into the game? Like, let's say I'm just someone that's starting off my career. You know, I'm making like I'm saving a couple $100. You know, how can I? Unless I have like so much time to find a mentor to invest like what you do, like as a side hustle. Obviously that's doable, but would you say to like get in the game, like REIT is the way to go, or you have a different perspective on that?
I think it wouldn't hurt to start, you know, and at least kind of watch how these REITs function and what kind of strategy they have. You know, obviously if you put your own money in it, you're gonna, you know, observe it more carefully. So what I like to do is I like to keep an eye on REITs and also kind of private equity real estate, funds.
Okay.
And look at what they do. Obviously, the scale that they operate in is going to be huge.
Yeah.
But in terms of the general scope and the strategy, I can learn a lot from them. So that's what I like to do, and I think there's a lot of value in doing that for even just someone starting off as well.
And what kind of REIT do you follow, or private equity firms that you like?
Well, they're not really. There's a company called Brookfield.
Brookfield. Okay.
Yeah, Brookfield Properties that I kind of watch quite closely in terms of what they do. And again, they're not a REIT, or they're just kind of a property development management company.
Yeah.
Also Blackstone, just huge companies like that. They kind of operate at a different paradigm, but I like to kind of see what they do at least, and how they structure their portfolios and how they strike deals with different kind of different companies, and because the way that they do deals is going to be really different from the way that kind of average investors do deals.
Right.
Because for them, generally they're not only dealing with a property, but they're also dealing with a corporate entity that controls the property, and there's like many aspects or elements that you can enter the deal from. Whereas for a residential deal, it's kind of more simple. You just consider the price and the basic terms and the timeline and things like that.
Mm-hmm.
So I like to kind of dive into those complexities of the deal, but I mean, of course, starting off, you don't have to do that.
Right. I want to bring it back again to the more mindset part of the conversation and how we should think about real estate. As you mentioned, when you first started off at JML, it kind of like exposed you to the way that investors think about investments, and you don't put it at a pedestal, right? And obviously, as you mentioned, a lot of young people feel like we can't get into real estate because it feels like the capital requirement is so high. So like, what would you say, how should one not think about real estate? Any kind of like the major thing, hey, this is the common kind of myths or pitfalls we should avoid or to think about real estate?
I think the biggest thing I would say to that is that you don't have to buy in your backyard, right? So for a young person in Hong Kong or Macau, you don't have to limit yourself to Hong Kong and Macau. You can look internationally. Obviously, you want to be smart about it. You don't want to just buy any kind of property anywhere in the world, but you want to find a market. Like for example, myself, I invest in the UK. There's many reasons for it, but one of the reasons is that I had access to it. So my mentor, my partner Keith, is from the UK, and he had kind of knowledge about the market and things like that. So if you have some form of access to a certain market, you can tap into that. If not, then you just kind of consider the macro kind of pros and cons of the country. And generally speaking, you want to go into a stable political and legal, like a country with stable political and legal infrastructure and sound fundamentals of the market. So you don't want to go into a country that's like, there's so much speculative money going into it. You want to go into a country where it's the market. For example, in the UK, there's more demand for housing that there is supply. So it makes sense to invest in a market like that. But then you don't want to go into a country that's like kind of oversupply. So it's an overdevelopment. There's too much supply in the market, and people don't really know what to do with it. There are certain markets like that. So you want to be careful, but you also have to look broadly. You don't have to only invest in where you live.
Okay, so what's the biggest reason why we should look beyond our backyards?
Well, to bring it back to Hong Kong and Macau, it would come back to the yields and the cash flow. So in Macau and Hong Kong, the property values are so high that if you borrow, say, a standard mortgage, right? Say you borrow 70% and you're paying interest on it. Even if the interest rate is really low at the moment, you're probably the rental income you're going to receive from that property is probably not going to cover your mortgage payment.
It's not, yeah.
And also the management costs, because a lot of properties in Hong Kong and Macau have a management fee component to it, because there's a managing company, they have to clean the hallways and all that. So it's probably not going to cover it. So you're going to have to put all of your rent into covering those things, and then some of your own salary or whatever other income source you have into that property. So that's not really an ideal situation to start to begin with when you invest in property. So, but that's not the case in the UK. So if you buy right in the UK, you can buy a property where the rental income is more than enough to cover your mortgage costs and your management costs, and still give you some cash flow left over to do whatever else with it.
Right.
So, and that's kind of market dependent. So that's one of the things that I consider.
Right. So that's a big distinction, because one is an asset, which gives you positive cash flow each month, and
Exactly.
actually one is a liability.
Exactly.
So most people have a liability in Hong Kong, Macau with their real estate investments,
Yeah.
because it's actually taking them more money each month than giving them, and you're only making money in the appreciation but not the cash flow gain.
Exactly. And the biggest thing about that is that appreciation is not something you control. You can't control that, right? The market does what the market does. If it dips, you can't really do anything about it. So to bank on that, it's kind of more of a speculation than an investment at the end of the day.
And in your opinion, why do you think not a lot of people are talking about this strategy to buy outside of their own city?
Because it's not as familiar, just people just don't feel comfortable around it. But what they don't realize, I think a lot of the time, is especially for mature markets like the US or the UK, the market is so transparent now with the internet and different technologies. There's platforms like Rightmove in the UK that you can find all the information you need about the market. It's all centralized on one platform, Rightmove, Zoopla, and a few places.
Okay.
So you can do pretty thorough due diligence and research in the market just from your desktop. And leveraging technologies like that, it makes it so much more accessible to invest in overseas markets than it used to be. So I'm not saying that you should just go out and buy something blind. Do your research, obviously. And certain markets are more favored towards that than others, because, for example, if I want to buy something in Cambodia, there's not going to be a centralized database where I can kind of search the market and look at different, comparables and all that. There might be something, but it's not going to be as organized and as transparent as Rightmove in the UK. So something like that is something that you have to consider when you look at overseas markets.
Yeah, got you. And just talking about like cities with low yields, right? Like parts of China, Macau, Taiwan, I believe Korea as well, right?
Yeah.
Like the yield in Macau, I believe, is 1.6% to 2%, and let's say somewhere in even in Australia or US or UK, it's like 5 and above. And so it's like there's like that arbitrage when you use that amount of money, same amount of money, but you put that in overseas. It's actually more productive, and you can use that cash flow overseas to pay for the rent here in this city.
Yeah.
So I just feel like that's such an obvious thing to do, when obviously if the city that you're in, there's not much more appreciation, like kind of potential going forward.
Yeah, exactly. I think a lot of people in Macau and Hong Kong feel smart because they made a lot of money in real estate, quote unquote, because they bought a while ago, it appreciated like crazy, they made some money off it, and they feel like, oh, I'm really good at real estate investing, and they kind of like call it a day at that. But at the end of the day, Macau can't appreciate forever like it has done. I'm not saying that it's going to be stagnant forever, but at the same time, it's been crazy over the last 10-15 years, and it's not going to continue to be like that. I think I'm quite bullish on it in the long term, but in the short term, it's definitely not, at least in the last couple of years, it's not been like that, right? So yeah, if you invest in overseas markets and you bring some funds back, that's one way to do it. But also another thing you have to consider is exchange rates. And also, when you send money back and forth all the time, it can kind of incur transaction costs. Right. So what I would do, generally speaking, is if you buy property overseas and you're generating cash flow from it, don't send it back all the time, but just kind of let the funds accumulate. And when the exchange rate favors you, then you can bring all your funds back at the same time.
Nice, yeah.
Yeah. So in that sense, you save on transaction costs and you benefit from exchange rates, because it can make or break your deal. Even if you do a really great deal overseas, if you murder yourself on exchange rates, you buy, because if you're buying in the UK, you have to buy pounds first. If you're earning in Hong Kong dollars or patakas, you have to buy pounds, and then those pounds have to buy the property, right? So if you buy pounds when it's really expensive, and then you have to sell it at a time that it's like really disadvantageous, then it might eat up all the profits that you generated from that deal.
Right.
So you kind of have to consider that as an added element in international investing that you don't really have to consider when you're a domestic investor. But it could really amplify your profits, like 20-30%, depending on the variation, or it could just kill your deal.
Got you.
Yeah.
Okay. And so which markets outside of Macau and UK have you studied?
Generally, I've looked at the US a little bit. There's some markets in the US that I find interesting, but I haven't gone deep enough. I haven't invested in that market at all.
Okay.
So I'm not too sure, but in the US, I think Philadelphia might be an interesting area for investment, but I'm not too sure.
Okay, so obviously you're bullish on UK market for the long term.
In the long term, yeah.
How about short term?
Short term, it could be pretty volatile.
Okay.
Yeah.
And within UK, which are the more specific areas that you like?
So the UK breaks down basically into two markets. There's London, and then there's everywhere else.
Right.
So London prices are pretty expensive, even though it's taken a hit from COVID. It's still pretty expensive, and everywhere else in the UK, property prices are pretty cheap. For example, the cheapest property that we own is a small 2-bedroom house. We bought that for £25,000, which is 250,000 Hong Kong dollars.
Oh wow, okay.
In Hong Kong and Macau, you can't even buy a car park with that money.
Yeah, not even half of it.
Yeah, so that was a really small deal that we did.
Yeah.
And so there's parts of the UK that are just really, really cheap in terms of buying property.
Right.
But in London, it's quite expensive. But we do deals in London because, for us, the deals that we do in London, it's not only about the cash flow. The yields are lower, obviously, but it's not a kind of a buy and hold strategy there. We're kind of adding value and selling on to end users. So it's a different strategy because obviously if you're improving a property that has a higher value on, even if the added value on a percentage level is the same, you're going to make a lot of money.
Right.
The margin is going to be, on absolute terms, it's going to be much fatter.
Right.
When you sell the deal, right? So we still do deals in London, but we hold properties in the Midlands, in the West Midlands, in Birmingham, that generate pretty good cash flow for us.
And have you heard of Roofstock? It's a company in USA.
Roofstock?
Yeah, it's like a turnkey company that allows you to invest quite easily.
No, I haven't.
Okay, so it's basically a platform where it's all listed and it's like a whole streamlined process for people, any investors around the world to kind of buy into the US market. So it's kind of one-stop shop kind of place. Is there a UK equivalent of that kind of service?
I think so. I know that there's some crowdfunding and P2P kind of platforms for property in the UK, but I don't really know too well. Yeah.
Okay, no problems. So let's kind of go back into the way we should not think about real estate. So in addition to not just think about your backyard, is there any other things that we should other ways that we should not think about real estate?
This is kind of a pet peeve of mine, but I really don't like it when people think of real estate as just a place to park money. Because it's not good for the market, it's not good for the property. It doesn't really, because a lot of people do that in Macau. They just buy property, they park their money here, and they don't rent it out, and they just let it sit. So, and they're treating it kind of as a store of value.
Right.
And some people, I'm sure, they're trying to launder money through real estate. So that is one way of looking at real estate, as just a place to park your money, that I don't think is correct. Because at the end of the day, it's an investment, but also it's a utility, and it's a resource for the city. People have to live in these properties.
Yeah.
So if you're doing that, I don't think that's the right way to invest.
Right. And let's think about how we should think about real estate, the right mindset. I remember you always say creativity is a big part of real estate.
Yeah.
So can you talk to me about that? How can one use creativity in real estate?
Well, creative, like a lot of people think that real estate is like really kind of standardized and there's not much room for creativity. But actually there is. If you're in the industry long enough, you'll see lots of things they're really creative. It can be implemented in different ways. You can buy real estate creatively in terms of finding people who are motivated to sell their property, different marketing strategies to find these people, etc. You can be creative in your negotiation with acquiring the deal. Once you acquire the property, you can be creative in terms of how you renovate it, refurbish it, add value to it. And then you can also be creative on the back end, like how you find tenants, how you find a buyer. You can be creative with how you finance the property. So there's lots of things that are up for interpretation and creativity if you think about it that way. But a lot of people, they just think about, I got to save X amount of money for a deposit. I got to buy an average price property is this much, so I'm probably going to buy something in that range. And then my rent is this much, and that's just about it. But it goes far beyond that. There's like many ways you can kind of add your own kind of touch and creativity into real estate.
Okay, got you. And I want to kind of, I don't know, my mind kind of went to this point. Remember we had this one conversation back, at OTT when we at the pub, and that's the first time I kind of talked to Sam about real estate. And I was like, hey, what do you do, Sam? And like that's the first time we kind of like had a longer, serious talk.
Yeah.
And I was like, hey, you work in real estate, but the biggest thing about me in real estate and why I didn't kind of like that asset class a lot is because I just hate the fact like I'm a house slave. Like I have this 30-year mortgage I have to pay down. It's like a burden to my name.
Yeah.
And you told, that's when you told me about, hey, look at other like overseas property and you can have that arbitrage and it becomes like an asset, right? So I love that strategy. But like, let's say eventually I want to buy in like my backyard, but it's still kind of expensive.
Sure.
How can I use the overseas real estate strategy as a stepping stone to eventually like have the capital to buy here?
Well, I mean, the most obvious answer to that, I guess the most simple answer is like if you take your capital overseas and you buy assets that produce strong cash flow for you, what you can do is, you want to buy something back home, sure, you can buy it and then using the cash flow from the overseas properties pay off your mortgage here, your monthly mortgage payments, I mean. So that's one way of doing it.
Okay, but with that I'll still have to generate another down payment to do that. Okay. But I mean, to even generate the down payment is a problem for people here, right? Since it's the down payment so high, even at like 30% here. What's it usually?
Generally speaking, at 30%.
30%.
Yeah.
So that's still pretty high for
that
the
is pretty
average
high, yeah.
people. So would you say it's more like maybe they do a couple of burst strategies outside to build up that capital, or like hope that, I mean, like whether you buy it in USA, Cambodia to appreciate, and then over 10 years and have like kind of transfer that back here? Like how are you thinking about that?
Oh, I see what you mean. Okay, so if you're trying to buy something here, that's one way to approach it. If you can actually, implement the burst strategy overseas, build up a substantial portfolio. Say you accrue maybe 5 or 6 properties over 10 years or whatever, right? And over that time, you're generating cash flow, but hopefully you bought in the right markets and you bought properly and with a sufficient margin of safety. And so, you've built up some equity, in these properties. What you can do is you can sell a couple of them and then bring those funds back to, your Macau or Hong Kong and buy something here.
Got you. All right. Nice, man. Is any other thing that you would like to share in terms of like, hey, you know what, I wish I just kind of like knew about this when I first start thinking or starting in real estate investing? Because I feel like, as we have mentioned prior to me kind of understanding real estate a little bit more in the past 3 to 4 months and kind of reading a couple books on it, listening to some podcasts on it, I just feel like, oh, okay, like there's more possibilities than my limited mind once thought of. So like, is there any other thing that you kind of wish you know or you wish you kind of like started with?
I think, well, the most important thing I think is that you make your money when you buy the property, right? So you always want to buy, like from an investment perspective, it doesn't really make that much sense to pay full market price for a property. Generally speaking, you want at least some kind of a deal or a discount on it. And the way you do that is by finding a motivated seller. And that helps you on so many different levels. If you're not paying full market value for it, immediately you're locking in that level of equity, and that really protects you from any kind of market fluctuations and things like that. But also, the margin of safety allows you to have feel more comfortable holding that asset for the long term. And like I said, real estate is an ownership game. You want to build up your equity over time. And to do that, you have to hold assets for a long time, because assets take a long time to appreciate in normal markets. Maybe not in Macau over the last 15 years, but generally speaking, they take a long time to appreciate. So right off the bat, instead of just going to an agency or a property show or an exhibition and buying something off the shelf, try to find a deal. I think that's the most important thing. Find someone that you can help out by taking their property off their hands in a convenient manner, or in a fast. Maybe you're buying in cash or something, and then solve that person's problem, and then for that, in return, get a discount on the property, and that's going to give you that margin of safety that you need.
Let's go a little bit deeper into like how should one analyze a deal? How can we spot that like gem of opportunity, like without going too much on the technical side, like cap rate and all that, right? So like what I wrote some down. It's like obviously the location.
Yeah.
I guess like the population trend, school ratings, the appreciation, kind of like the weather or the yield of construction, like you said, with the built and all that stuff. So in addition, like just off on top of your head, like what are some of the things that like we should make sure that we look into these things when analyzing a deal?
When analyzing a deal, the first thing, like I said, is buying it at the right price, as mentioned already. And another thing that I really always look at is kind of if there's scope for us to add value to the property. But like I said, not everyone's going to be able to do this because maybe they don't have the time, or they don't have the knowledge, or in terms of the resources to renovate a property and do all that, especially if it's overseas. So what I would say then is, in that case, like you mentioned, all the things are really valid. Location is really important. So you generally want to buy a property in kind of an area that has strong demographics. The first thing you want to do is make sure that town or city or wherever you're buying property at is not shrinking.
Okay.
People are not leaving that place.
Right.
If anything, they're coming in.
Right.
You don't want to buy a property in a place where people are leaving.
Right.
I mean, that's a nightmare. You just don't want to do that. And another thing is, like you said, there are some markers that you can look at as well. For example, you look at a company like Starbucks. They'll do a lot of research. They spend a lot of money on researching up and coming areas. So if a new Starbucks opens in a place, you can kind of guess that they base that decision to open that store there on many different things,
right,
including kind of what's happening in that neighborhood,
right,
and the income levels rising and things like that. So, that is something you could consider. Another thing is like infrastructural developments. Sometimes in the UK they call it the HS2. It's a high-speed rail going from London to Birmingham all the way up to Glasgow. So areas around that. Well, it's not built yet, so now it's kind of speculative. But in the future, you could say that it's going to appreciate around that kind of infrastructure. So these are all things you can consider. Yeah.
Nice, man. I really like the Starbucks one because you're just letting, just kind of like leveraging someone's homework.
Yeah.
On someone's research already.
Yeah, and you can do that with not only with Starbucks, but you can take hints from big real estate development companies, investment companies. What kind of markets are they looking at? Where are they selling? Things like that. You can kind of get hints from those things.
Okay, so like the Brookfield and the BlackRocks, those guys.
Yeah.
Okay.
So they're not going to tell you much about a specific deal, but they will tell you something about the trend of the general area or the country even that they're buying in. Yeah.
Is there any kind of like gurus, like real estate kind of guy that you look up to, like you kind of watch YouTube videos and follow channels and like that type of stuff?
I follow I mean, I tend to watch a lot of content around real estate, but I like this guy called Ben Mala on YouTube. He's a real estate investor in Florida. But I watch him mainly for the entertainment value because he's just got this crazy character, and I really enjoy that. But he's got some good tips as well. So Ben Mala, his channel is called Life for Sale.
Life for Sale.
Life for Sale, yeah.
Okay, got you. And I just kind of want to direct the conversation a little bit into the self-development part. Because we're all about that personal spiritual growth here at Divicati. So you off the record, you were talking about how there's a correlation or relationship between self-development and real estate. And can you just tell me a little bit about that relationship? Because maybe from someone like myself, I don't really see how that kind of ties together as of right now.
Yeah. Well, if you think about the idea of investing in real estate, you're not just talking about buying one property. You're talking about trying to build a portfolio, right? And if you're looking at it from building a portfolio over a long period of time, you gotta kind of look at what is a real estate portfolio, right? And if you think about a real estate portfolio, you're probably going to think of just a bunch of properties, like say 10 or 5 or whatever number of properties, just bricks and mortar. But really, it's not just that. There's the asset itself, but also it's kind of a cybernetic system that it involves you as the investor, your philosophy towards real estate, and also the people that operate it, the people that help you manage the properties, and the strategy that you have in place, and all these things, and of course the capital, the money, right? So it's a combination of ideas, people, human capital, labor, actual assets, and all these things, the flow of money. And so there's so many different dimensions of real estate investing. So if you want to have a good real estate portfolio, you need to improve every single dimension. You can't just buy good properties, because good properties, say with bad management, could ruin those properties.
Right.
Or say you have a lot of money, but you don't have a good investment philosophy or strategy, you could just waste all that money. Right. So what you need to do is, and at the crux or the center of that is you, because without you, the investor, none of this would happen. Right. So that's why it's so important to develop yourself as the investor, so that your portfolio as a whole kind of improves.
Yeah, it makes 100% now, because there's a saying, right? Like your business is kind of like equivalent to your own personal growth.
Yeah, that's true.
Because you like everything starts with you, and it makes sense with how you manage your time, the people, the systems, your productivity level. Are you lazy, or are you on point? It's not when you think about like real estate investing, it's different from just buying and living in there, because it's like a business now. You're running a business in a way.
And also, it's not just real estate, but any kind of investing is a reflection and an extension of your philosophy and your level of optimism. So what I mean is, like, for example, even if you're like a stock investor, right? What stocks you hold reflect what you think of the world and where you think it's going. If you think the world is going in this direction, you're going to buy stocks that reflect that. If you think the world is going to go in this direction, you're going to do that, right? So it's an extension of your philosophy. So in that sense, real estate also is an extension of your philosophy. So if you think, that the world population is going to halve in, the next 10 years, you're not going to buy real estate, because, there's going to be an oversupply and things like that. So you also you need to constantly refine your philosophy. You need to adapt it. But at the end of the day, what else are you going to do? Instead of, like, if you don't develop yourself, like, where is it going to go, right?
And as of right now, like, how are you doing research to refine your philosophy, and how are you kind of like feeding your brain?
I think, I take a lot of cues from Warren Buffett and Charlie Munger. I know that they're kind of equities investors, but their philosophy, I think, applies really, really well to real estate. Maybe even better than it does to stocks. So I study those guys, and those guys are always saying that investing is multidisciplinary. So it's not just like it's not just about finance and numbers and math. It's you have to combine different aspects of it. So for example, they even talk about like first principles thinking, which is from physics. They talk about mathematical foundational concepts. They talk about philosophical concepts. They talk about psychological market behavior. So it incorporates virtually everything, all disciplines. So it's not like to develop yourself as an investor, it's not like just reading investing books. You have to be holistic. You have to kind of take it in from everywhere. Yeah.
And do you study Charlie Munger and Warren Buffett from their like yearly annual report, or like which way are you absorbing their content?
So there's Poor Charlie's Almanac, which is a great kind of book that distills his philosophy.
Okay.
Sadly, Warren Buffett, I don't think has written a book yet, but he's written those, investor reports.
Yeah.
So interviews are great. Those reports are good. There's a lot of books written about Warren Buffett. So if you read one or two of them, one of them might be, paint him in one way, but if you read many of them, you'll kind of get a sense of like what he's like. So yeah, I think there's many ways. It's not just one thing.
Right. But did you read the annual reports and the Charlie's book?
Yeah.
Okay.
Yeah.
So you recommend those?
Yeah.
Okay.
Yeah.
Is there any other, like, speaking about books, is there any other like real estate investment books, or just like favorite books of yours in general that you'd like to recommend that ties into personal and investing?
In terms of real estate, the best book that I've ever read on it, with the most concrete illustrations of the fundamentals of building a good real estate portfolio, is The Millionaire Real Estate Investor. It's by Gary Keller.
Yeah, okay. Yeah.
So I think he's the same guy that wrote The One Thing.
Okay.
So that book is just really, really good. It just boils it down to the basics, teaches you exactly how to do it. So I would recommend that book.
Nice. And then what about one for like personal growth, or like that holistic approach?
Personal growth, I think the best self-development book I've ever read is this book called Mastery of Destiny by James Allen.
Okay, haven't heard of that one actually.
Yeah, it's a really short book.
Okay.
I think it's in the public domain, so there's like audiobooks on YouTube.
Yeah.
You can download it for free from the public domain because it's over the the copyright, whatever.
Yeah.
So read that book, man. It's really, really good.
Okay.
The Mastery of Destiny by James Allen.
Just give me a little snippet. What kind of juice do you get from that? Like, why should people read that book?
This book it's so simple that it's almost funny, but it boils self-development down into just the most purest kind of components.
Okay.
So to the degree that I can guarantee you, if you actually do what the book tells you to do, you are going to be successful if you don't die from a freak accident. Like, guaranteed, you're going to be successful.
Okay.
But it's just really hard to do, So it talks about things like being thorough. In your work, there's a chapter called thoroughness.
Yeah.
It's about how a lot of people are kind of shoddy and kind of miss out bits of their work, but you really want to be thorough. There's a chapter on like not procrastinating.
Yeah.
There's a chapter on, one of my favorite chapters, I think it's called mind building or something like that. It talks about how everything in the world is made up of something. For example, a book is made up of letters. The letters are made up of like individual alphabets, and a house is made up of bricks, and a country is made up of people. So everything's made up of smaller components, and it says that your character is made up of thoughts. So every single thought that you have is like a brick that you're laying on this house of your character. So if you have really weak thoughts, and thoughts of like weakness and fear and insecurity, and you're having jealous thoughts and all these thoughts, then you're building a really bad house. Where if you have strong thoughts of confidence, of building, of optimism, all that, then you're building a sturdy house where it doesn't only benefit you, but it benefits people around you as well. Yeah.
Gotcha, love that. And I guess from the book, right, like it's one thing to read a lot of books, and then it's another thing to retain the books. And I think the hardest part is to internalize the insights from the books.
Yeah.
So I guess from that book, like what have really stuck with you, and what have you actually been living?
Oh man, there's many different aspects. I think the thing that I enjoy the most is the last chapter is called The Joy of Accomplishment. So it's not just about, so the book is quite intense. You listen to it or you read it, it's quite intense. It's all about, having strong thoughts, confidence, thoroughness, and all that. But then at the end, it talks about a little bit about meditation as well. But then it talks about, the joy of accomplishment. So he says that the greatest joy a person can have is having a job well done and things like that. So just kind of learning to enjoy that side of things, I think is really valuable. Yeah.
Nice, man. Just to kind of like end this conversation on a more different note, where do you think kind of like the future of real estate is going? Because for me, like me and my buddies have this kind of thought where, like, if we, how to put it, like sometimes when we have these really deep rabbit hole conversations, like it's very masculine and kind of like business focused on talking about the yields and the different kind of like cap ratio and how to build the portfolio. But then I'm like, hey, sometimes I'm like, I would go out of that kind of mindset and think about like, what if we kind of built like a city from scratch? Like there's a lot of different kind of like fundamental issues in terms of financial or healthcare or just politics or corruption, and we're thinking about like creating this like nomad kind of space where people can just like chip in, buy like a land and start building, and everyone would kind of like it's kind of like a utopia that we kind of built. It's obviously very fantasized and it's not very structured right now. But we're kind of like, taking our time to kind of build up the concept a little bit more. That's where, like, I personally think, like, what's really interesting about real estate is to, like, have these nomad communities where people are, like, living off the grid, where we're utilizing solar system, where people don't have to pay for their food, because we have these systems around that can do robotic farming and things like that. So basically the first layer of Maslow hierarchy needs is eliminated. Right. And people can just come and live in this space, and it's like this new country where it's like everyone's kind of welcomed in a way. But like that's kind of like down in the lane, 10, 20 years or a little bit more, when we have the more resource to kind of build this nice little space where we have kind of like a common goal. And the goal of this, how like, when we talk about the world, there's not like a world vision. We're like, hey, this is the purpose of why we're doing this. As we're like fighting each other, we're not thinking about, hey, you know what? Actually, let's be a little bit more conscious. This is the way that we should do things. And because of bureaucracy, there's actually better policies that's proven by science, like data, but we still don't implement. Like, for example, the war on drugs, like how Portugal is handling it versus like the States or versus other places. It's shown that when you decriminalize drugs and you don't see people as criminals, but you kind of help them, it's better. But why are these systems not being in place, right? So we're thinking about like creating just a kind of like a new world in a sense on that end, right? So that's tying kind of my philosophy around real estate in the world together in some of the opportunities to create these little community spaces. Right. But for you, like ultimately, where do you see your contribution, I guess, in the world in the long term? Was like, okay, through my work, this is the impact I want to make through real estate, and I feel like the world's going here, and I want to kind of like sway that narrative and my philosophy in creating like this kind of like world.
Well, I don't know about something as high level as what you're talking about, like building a utopian world, a city from scratch. I think actually someone in Saudi Arabia, I think they're trying to do that. They have like a whole plan for this like great utopian city where there's like zero waste and all that. Yeah. I don't know. I forgot what it's called, but I know that I've read something, and my friend was talking about it too. Like there's someone actually trying to do that, so you should look into that. But I think from real estate, there's definitely a lot of things that could be improved. Even in existing cities. So for example, there's in the UK. There's a push for kind of making the houses more kind of energy friendly. So, if, for example, the UK gets really cold, right? So if the house itself retains more heat, then you need to use half the electricity or whatever, or where if the house kind of lets all the heat get out, you need to use like twice the electricity. And across the country, that's going to be a huge difference, right? So things like that, just like making the houses more insular, using double glazing windows and things like that. that has a contribution towards real estate as a function of kind of an integrated part of a better society. I think also, obviously, if you're talking about real estate, and you're talking about a social issue that's related to that, that's homelessness, right? Like there's real estate, and then there's people that don't have real estate, which is home. They're homeless, right? So I think in that sense, we're making really good progress because 3D printed houses and modular houses are getting cheaper and cheaper and better. So soon we're going to be able to kind of print on demand these houses, and they're not going to be necessarily houses that people want to live in at first, like everyday people who can afford to pay rent or buy a house. But for a person that's on the streets, it's a much better alternative than being on the streets and exposed to the elements. So in that sense, if we can kind of scale that modular house building and things like that, in the short term at least, it can provide housing for these people who are on the streets. In the long run, if the technology itself gets really, really good, then maybe even people might want to start living in it when they're not even homeless. Like they might start, because the housing stock in the UK is really getting outdated. Some of the houses are 100, 120 years old. So if they start building these modular houses that are like cheaper and better and safer and everything, then maybe that'd be a better alternative as well. That would actually really change the market a lot. But to me, it's kind of down the line, because the thing with modular housing and technologies that are so new like this is that, especially with real estate, with an iPhone, for example, they release an iPhone, right? And it's really expensive at first, and that if you wait a couple months, you're gonna be able to buy like a better thing or much cheaper. So some people, early adopters, buy the expensive one. They don't really care because they're such a fan, right? But then most people just kind of wait until the newer, cheaper thing comes out. But with real estate and with modular housing and things like that, it's kind of hard to do that, because if a new product comes out and you need to buy this whole entire real estate, but then that something down the line is going to come out that's cheaper and better, whatever, then it's like, what kind of decision do you make, right? Like, because if you commit to this new thing, that it's going to be outdated and not as good as the next thing. So that kind of decision dilemma might get in the way of pushing products out like this. But yeah, that's kind of a roundabout way of saying, there's social issues definitely that we can tackle with real estate investment for sure.
Okay, got you. And I guess my last question is, with these social issues, environmental issues, like as of right now, it doesn't have to be the case, but like how do you see like Epic and with Epic, how would you kind of contribute to that, or like, I guess it's like, apart from making money, right? What's the bigger purpose of all this, right? I think that boils down to that.
Oh, okay, I see what you mean. Well, the bigger purpose of Epic, for now, because we're just kind of a starting company, where we just started 2.5 years ago. Yeah. For now, it's just to stay afloat and make money and build a company. That's kind of our only objective. Right. But down the line, definitely, we want to get into a little bit more providing like social housing and things like that in the UK. Give back to the country a little bit. Keith is actually really passionate about that. He talks to me about that all the time. So I think, that's something that we would look at, because there are strategies in the UK that you can implement that are good for your financial returns, but also good for the local community. It's called social housing strategy. In general, that's what they call it. So what you do is you take a rental property, and instead of finding a normal tenant on the private market, what you do is you rent it to a kind of a social housing authority in that community. And then they'll find someone that needs housing but can't pay for it or can't afford it, and put them into your property. But obviously some of these are kind of at-risk tenants, so they might be delinquents or whatever. So what the social housing authority will do is they'll guarantee your rental income, which is generally going to be it's not going to match the private market rents, but it's going to be guaranteed. So, and it's going to be a longer period of time. So even though you're receiving maybe say like 90 or 85% of what you could be receiving, you don't have to manage the property. You have someone in there that's kind of, it's not a tenant that you would take on his own merit as a normal tenant, but he's still in there as a social housing tenant, and he's under management by the social housing authority. You could still generate cash flow using this strategy, because depending on how much you pay for the property and what your mortgage is, obviously, but you could still generate good cash flow. So that kind of strategy serves both elements. It has a social impact, and also it brings you, the investor, kind of a good return as well. So you can do that.
And an idea just came to me. It's like, what's cool about it is like you can create a community out of that social housing. Like, imagine you're providing social housing for, like, let's say 10 people there, and there are some add-on services. Maybe you're working with the local, like community councils, like something like that. Just creating a space where people can heal, people can, like adding personal development into that spectrum and that mix of ingredients, and helping people like see this social housing as a place where they can just be there for a period of time, get back on their feet, and kind of like move forward again in society. So it's like that's like little hub, right?
I think on the council level, they already kind of do that. They offer them kind of training and work experience and things like that, or they try to help them out in a different way as well, not just finding housing. But yeah, I mean, as an investor, you could definitely add your own flavor to it. You could kind of try to add value to your tenants in whatever way you want. Maybe you could pay for their development, or whatever the case may be. There's many ways of approaching it.
Yeah. Kind of like sidetrack. Like one of the ideas I have is like create like a personal development house where like I'm the owner of like this network of houses around the world, and where people, I guess, like maybe buy a membership, and then it's only like people that are really into personal and spiritual growth and live in these places. So it's I still haven't like fleshed out the total idea yet, but like a personal house is a concept that's like quite popular right now in like the States, I guess in somewhere else as well, where people with the purpose to improve themselves come together and live in a space for a period of time. And it's just
so what would happen at that house? Like
there would be, for example, there were like certain ground rules. For example, there might be like a ice tub where they do like breathing techniques. There might be, for example, like a big whiteboard where they put everyone's goals on it and then keep everyone accountable. Perhaps there's like a private chef where like make sure everyone does not need to work, so they leverage their time, like the Tim Ferriss, like outsource your real work, that type of stuff. So I mean, every house is a little bit different, but maybe we can maybe me as like the person that organizes this could put up like a theme or like something like that. Some rituals.
Oh, that's interesting. Yeah. Actually, I have a friend in the U.S. in Colorado that was telling me that he was a lot of people were wanting to do the ice bath thing, Wim Hof thing. Yeah. And then like they didn't want to do it at their own house and like buy all the ice and everything. So he would just like do it at his house, and people would come to his house and do it. Yeah. And then so that's kind of, well, they wouldn't live at his house, but it's kind of an element of what you were talking about. Yeah. It's like people coming together to a physical space. Yeah. For self-development.
Yeah. Is it like at a backyard, right? I'm assuming.
Yeah. So he would buy the ice. He would bring the tub, whatever. Okay. And then these people would come, and then they just do the ice bath thing. Okay.
He's a homie from Macau?
No, I met him in China. He's American, but I met him in China.
Okay. Yeah. Dope. So as you say, like there's a lot of creativity in real estate. Yeah. Just speak in this conversation alone, right? Personal development, social housing.
Yeah. There's many angles to it for sure. Yeah.
There's also one called house hacking, which I find quite interesting, where like you rent one part of the house, and you live in one part of the house and you rent the other parts of the house, and that pays the mortgage, and you kind of like live rent free.
Yeah, I think they do that in the U.S. a lot. So what you do is, it's not, instead of a one part of the house, it's like a duplex, or it's a multiple kind of houses, right? So you would live in one unit and then rent out the others. I think they do that a lot. Yeah.
Cool, man. So to wrap it up, Sam, is there anything that you kind of want to share, want to say before we kind of end this episode?
No, not really. I mean, I would just like to, say thank you for hosting me on this podcast. It was fun to have a conversation. conscious conversation. And if anyone's listening and would like to connect with me, you can do it at epicpropertyinvestorsclub.com, or I guess you can send me an email. Are you gonna put it in the show notes?
Yeah, I'll put it in the. I'll put like your email on the
Okay. Yeah. So it's gonna be in the show notes. Just send me an email. I'm happy to talk to whoever. So thanks again.
Yeah.
And looking forward to actually watching this episode.
Yeah. And before you leave, actually, I subscribe to Sam's newsletter, and he puts out some interesting stuff. He's a pretty good author, in my opinion. Once in a while I open it, and so you should subscribe to that as well.
Yeah, it's on the website, epicpropertyinvestorsclub.com, and then there's a section for the newsletter. You can just subscribe.
Yeah, awesome, Sam. Thanks a lot for doing this, man.
All right, thanks, man.